There's a 50% chance you can win $1,000 or a 50% chance you will lose, or would you prefer to win for $150 for sure? You can stop the video here and think, or let me ask you another question. Let's say you earned $5,000 from the stock market and then you lost $2,000. Would you feel like you earned $3,000 or like you lost $2,000? You can stop and think again. I continue. If you chose to win for $150 in the first question, you are a sure thing like many people. But if you chose to win $1,000 with a 50% chance, you are more of a risk taker. According to prospect theory, people tend to avoid risk in the event of a gain. And that is exactly why you chose to win for $150. As for the second question, according to prospect theory, the psychology of losing outweighs the psychology of winning. Yes, you heard right. Not losing is more important to us than winning. In other words, you probably feel like you lost $2,000 right now, because losses have a stronger and more emotional impact than gains of the same size. Are we really making rational financial decisions, or are we victims of psychological biases? Prospect theory directly addresses this question. People evaluate gains and losses differently, and this has a direct impact on their investment decisions. Imagine you have two options: a guaranteed loss of $1,000 or a 50% chance of losing $2,000, but also a 50% chance of losing nothing. Which one would you choose? Logically, both options have the same expected value. However, according to prospect theory, most people would choose the second option. Why? Because instead of accepting a certain loss, they prefer to hold on to a glimmer of hope. This is exactly why many investors hold on to losing stocks instead of selling them. Now, let's consider another scenario. You invested in a stock that generated significant profits, but now it's declining. Should you sell it or hold on, hoping it will recover? According to prospect theory, many investors prefer to secure their gains early. However, when facing losses, they tend to think, maybe it will recover, and hold on to their losing stocks for too long. Is this a rational decision, or is it purely psychological? Are we really making rational decisions? Prospect theory shows us that we often make investment decisions based on emotions rather than logic. Since we perceive losses as more significant than gains of the same magnitude, we sometimes take unnecessary risks, while at other times, we rush to secure small, but guaranteed profits. By understanding these psychological tendencies, we can make better financial decisions. Have you ever thought about how losses influence your investment choices? When making financial decisions, do you act purely rationally, or do your emotions take over? If you watched up to this point, I would be very happy if you subscribed. Then I wish you a profitable day.